Before we look at the 10 stocks that you've suggested the panel look at, I choose a stock of the day, which is one in the news. I thought we'd take a look at Rio Tinto today, smashing out a record first half profit, surging well past $16 billion on booming Chinese demand for its Pilbara iron ore. More than 80% of its bumper profits coming from its iron ore division. This is some welcome news for shareholders, with the company set to divvy up Australia's largest interim dividend of $5.61 a piece. Payout represents 75% of Rio's underlying half-year earnings. John, just a stellar result. What do you think of it? And Rio's share price at the moment, they did warn that this demand for iron ore was unsustainable going forward, didn't they?
They certainly did, David. I mean, that's probably certainly fair enough, given what we know that banging along at record levels, and certainly trying to get as close as they can to nameplate in terms of production. But you're right, very impressive. We've obviously been tracking the iron ore price for the last 6 months or so, and that's been borne out in this result for them as well. A couple of the positives, obviously, the slight beat to consensus, the dividend plus the special, certainly very helpful. But not a lot of news around in terms of some of the growth options around Simandou and some of the Oyu Tolgoi announcements as well. So not really a lot from them on that sort of commentary. But still, they're right to warn that it may not last. But for the moment, I think you enjoy the ride as a shareholder, and the share price today reflects that sort of positive sentiment.
Okay, so it'd certainly be a hold on Rio. Would you be getting into it at these levels, or is it the top of the market?
No, it's actually a buy for us still, David. So $165 price target. That'll be under review again today after this result. But I think if you're an existing shareholder, I think you'd be happy to average up here and take some of those extra dividends while they're on offer.
Okay, and happy to get into it as well. Carl, what do you think of Rio?
Yeah, look, a tremendous result, certainly on the headlines today. There are some operational issues sort of just bubbling under the surface, but I don't think there's anything that's going to get exponentially worse there. They're probably manageable, and if anything, we should see some improvement going forward. I think that the key to unlocking the Rio Tinto, BHP, Fortescue conundrum is obviously iron ore prices and what they're going to do. You mentioned 80% of their revenues coming from iron ore. Most brokers are expecting the iron ore price to fall. I mean, it's currently around 200, give or take, US dollars a tonne.
But most are expecting it to fall this time last year.
And that's the point I was going to make. I mean, look, I started at ThinkMarkets just over a year ago, David, and the dynamics were roughly the same. Yeah. And the first thing I did when I started here was I slapped a buy on BHP, Rio Tinto, and Fortescue, not just because I'm from WA and it's compulsory if you're a WA analyst to do that sort of thing, but because I just saw this huge disconnect between where the brokers had factored in their iron ore prices going forward and where the iron spot price was. Now, I'm under no illusion that the spot price is going to stay where it is. Look, I'm also factoring in a decline, but nowhere near as bad as what the brokers are expecting. I mean, the brokers are expecting Rio Tinto's profits to decline by 25% each year for the next 4 financial years. I'm a believer that iron ore prices will stay higher than what they're expecting. I mean, I think it could get back into the low to mid 100s, but it's not going to be sub 100, which is what many are expecting. So, as long markets factor in, markets are all about expectations, and I think Rio's going to surprise to the upside with its earnings going forward because iron ore pricing won't be as bad as what many brokers are thinking. So, on that basis, that I think that there's kind of this worst case scenario factored in already. Anything better than that provides upside. I'm going to retain that buy that I have today. I still think you can buy it, and I don't think you can go past this 12% dividend yield. I know there's some specials in there, but why can't they continue to sort of lob in a couple of specials every now and then as well? So no, it's still a hold if you've got it, and I'd still be buying it as a core portfolio holding if you don't.
Yeah, and Carl, is the share price priced on a reflection of $220 a share for iron ore, or is it priced on that 150 or 120 that a lot of the analysts, or even lower, think it will be over the next year?
Yeah, it's definitely priced on the latter. So as we get further and further down the track, and the spot prices are staying above those levels, the brokers then will have to come out and increase those estimates to narrow the gap, as it were, and that just changes their valuation metrics for Rio Tinto, and those price targets just keep getting ratcheted higher, and that facilitates share price gains as well.